Hi and welcome to the Dow Market View for Wednesday the 27th of August 2014. Starting off in the 5-minute chart, we can see the market opening here yesterday afternoon at the BRN there of 17,100. Pre-market, we can see the market had already moved higher up to this level. Some selling taking place here. The selling doesn't continue because prices don't trade, or prices following don't trade below the low of this bar, so we can see the market setting itself up nicely for a start to the upside, which is exactly what it does. We then get the triple X buy signal, and we see the market moving higher thereafter. 3 o'clock we get the reaction to the durable goods news that was out yesterday afternoon, as we can see there with this sort of elongated price bar. And a question I received yesterday was that this is what's known as an upthrust, and the definition of an upthrust is that prices open, they thrust up, meet with selling, and then come back to trade and close on or near the lows. This is an indication of potential weakness. It is not a sell signal, it's to alert you that there is some weakness in the market. The market has met resistance as it traded higher, and prices have moved back to the downside because there is some selling in the market. Does it mean that prices following will move lower? The answer to that is yes and no. It depends on the background of the market, i.e. is the market bullish or bearish? And as I keep barking on about it in the market view, that the Dow is in a V-shaped correction. So let me just switch to the daily chart for a second. This is a V-shaped correction. You can see it clearly there on the chart. And what we've got are prices moving back to the upside. As prices move back to the upside, it will be met with resistance, i.e. selling coming into the market, profit taking, or those that have been short from the correction eventually exiting the market and taking a loss, which will then add to the buying side, of course, because if you are short, you have to buy to get out of the position. So you'll get this resistance as the market moves higher, or people selling in thinking it's going to go back down as it reaches a Fibonacci number. There's a whole host of reasons why you get upthrusts in the market, but what determines whether the market's going to move lower after is in the background of the market. In this case, we get potential weakness as the market moves higher, but it doesn't mean to say the selling is going to follow through. And in one of the instructional videos with regards to test bars that I intend to record when I can get 5 minutes to do it, I will show you how you can use the extension tool in order to measure how much momentum the market has to the downside following any potential weakness, and vice versa to the upside. So here we have a situation where we had this potential weakness, and the clue really, again, without using any other tool, just look at the price bar that follows. The low of this bar isn't the same as this low, so the market is showing that it's still bullish. We have a second upthrust here, the market trades lower, but then again, look what happens in the bar after prices move back to the upside, and the same here. You can see these indications. Now look at the top of here. We've gone through the scalp, but if you have a look here, we've now got an upthrust at an all-time high, 17,150, and the market trading sideways. We get further potential weakness here with the telegraph pole, which is where the market opens, it trades lower, and then comes back to close on the high. It can be on low or high volume. In this case, it's on low volume because it's below the average line, as is this upthrust. So there's no major selling around. However, there's a clue here as the market tries to drive through the all-time high. There is no buying. If there's no buying, then the market is likely to drift lower because it needs to drive through on increased volume to show that there is some volume to actually back the move. There is new buying coming into the market. We don't see it. So here we have a clue that the market is starting to struggle. We also have a situation as well, which is known as a double top, even in its smallest form. In fact, a triple top, where the market came back here, it closed above and then closed back. So we've got an issue. We have an issue here in the market, which again, if you read the market bar by bar, it will actually tell you a story. So on this trade, the most you could expect is 20 pips, or points as I prefer to call them, in the Dow. And then prices drifting lower there, which you see with the just turn that off, stop it drawing on the chart. When we see the sell signal coming into the market around 5:45 in the evening. The market pretty lackluster yesterday, and again, let me just move the chart back a bit for you and just have a look. We've only got 50 points from this grey shaded area to the next, so it's a very narrow trading range for the Dow for yesterday as well. So the sell signal comes in, and look what happens as soon as it's filled. We see the buying coming into the market. Not only that, but we also see buying pressure here at the previous day's high, trying to support the market. So the market is desperate to stay above the previous day's high, trades back and fails to do so. What happened in this area here? The market's gone short, and if I just pick up the fib retracement, if I go from the high down to the low, I can see the market struggling with the 76%. What a surprise. And again, if I just drag that across, you can see it comes back to this area and struggles again and struggles again. And also, if I want to apply this from here to here, again I get a double confirmation that there's a problem, and then the market eventually drifts lower. Again, there will be videos on long videos, no doubt, on how to use these 76%. And also, again, I can go from here to here and I can see the same issue there as well. So I can read the markets in real time by using just 3 or 4 tools, and again, eventually the market goes through. But of course, we're heading towards the end of the trading session, and even though the market eventually went on to trade down to this level, I can tell you now, you will not have picked up 20 points on this trade. There is no way, because the spread switches from 1 point to 3 points on most markets on the overnight, and some actually to 6 points. So the best sort of possible profit on this trade is around 6 to 7 points at most. On the daily chart, we can see an interesting picture here. Let me just switch from the markup to navigation. Let's reduce the height on the chart there, and let's just bring this together a bit. Move it over to the left. And yesterday you can see that we've got the market trading back up to 17,149. The high yesterday was 151, if I recall. Let me just double check that. Let's just drag this chart over, and let's just have a quick look. 154 was the high, so not too far off the mark there. So the daily chart is back. The V-shaped correction is more or less complete, and it's a matter of whether prices are going to drive through this and continue higher. If you look at the ToughXP Next Gen market view, I actually covered something in there, but for those of you that are beta testing this, let me just go through what it was that I actually spoke about with regards to the pattern in the Dow, which is a very interesting pattern. It was something I was looking at yesterday. I was just putting this into the manual about the importance of why you should look at the daily chart and the background of the market before you consider even trading on an intraday basis. You need to know the background of the market. It gives you all the information that you need. As we saw yesterday, the market, the all-time high we've got there, 17,149, and the market trades up to 17,154. We can expect some weakness. We get the weakness unless we get the new buying driving through this area. But without looking at the daily chart, you wouldn't have a clue that you were at an all-time high. So this is why it's important to have the daily chart in your analysis before actually trading. Right, so let me just show you what I came up with yesterday. Let's just start off on the left here. It doesn't matter where we start with regards to this. The Dow is in a bull market. We've got prices trading down and then coming back we then see prices trading sideways until we get to this point. And this is where it gets interesting and fascinating, because the market, from this high to this high, once the market goes back on to make a new all-time high, which it was at the time, prices come back. So this is going to be a familiar pattern. We've got another all-time high there. The market trades through. We see the increase in buying, but eventually it comes back. Again, we've got a double top here where the market trades over to here, and guess what? The market comes back. Let me just move the chart over a bit and move this back. So you can see this pattern unfolding in this market. It's a repeatable pattern. Repeatable patterns are what all of the signals in the software are based upon, because for some unknown reason we do get these repeatable patterns in the market. And there you see the market going to the all-time high, retesting the all-time high, and now we get the market with this V-shaped correction that we've seen here over the last few weeks, and the market trading back to the all-time high. So what's the likelihood the market's going to go through for a few days, reverse, and make a correction? Also note on here, let me just remove these lines for you for a second. I am going to do a more in-depth video on this, again given time, but notice how the market comes back and there's small V-shape corrections all the way through here. You can see each time we get these corrections we get this V shape. They're either small or in this case a much larger one. So we are due another sort of V shape. So again, having this information at your disposal allows you to think or see and to use on days where you get sell signals. You can refer back to the daily chart and with a certain degree of probability know whether the market's actually going to give more than the 20-point scalp. In a bull market, you won't get much more on the downside generally than the 20-point scalp, because the market is strong to the upside, of course, with all of this funny money manipulation and pumping the QE straight into the stock market and not going to where it should go. But that's another video. So here we can see the market going back towards the all-time highs for the Dow, and again this is crucial today when you're looking at the markets. 17,150 psychological level. The market needs to break through this in order to move higher, and it needs to go through with an increase in volume. So if I just remove this, go to navigation and reset the chart, and you can see there's the, just delete that and bring this down a bit because we're in a smaller time frame there. You can see the psychological level there. We're trading between the two at the moment. The market's rather lackluster, and unless we get something today news-wise, we've only got a couple of economic news items. One's already gone. The second one's out at 3:30, which is not relevant or pertinent to the stock market either. So we haven't got anything today. So unless there's something of a geopolitical nature, we can expect the market to remain sort of within this trading range as well. So keep that in mind as well. If there's 20 points on the table, you may wish to consider taking it. There will be volatility at the start, but it depends how much momentum it has thereafter. We are into the last week of August, 27th today, so next week we're heading for September. The market should resume more or less to normal as the vacation season ends, both here in the UK and the US as well. So it could be a sort of an odd week, but nevertheless you still need to do the background and have a look at where the market could go, just in case there is something to move the market, a surprise news item from Yellen and co. You just don't know what it is, so or what could happen. Right, that's enough waffling for me as far as this one's concerned. I will see you in the next one. As ever, thank you for your support and your questions. Do keep them coming, and until the next time, thanks for watching.